Stocks on Wall Street close in the green as tech stocks lead the gains. Dow adds 130 points while the Nasdaq adds 175 points. Investors also assess the latest Fed minutes that show sharp divergence in policy outlook. Tepid cues from Asia as China, Hong Kong, Taiwan markets remain closed for Lunar New Year. The GIFT Nifty is indicating a mild positive start for the Indian market. Crude oil prices surged 4% after U.S. Vice President J.D. Vance says Iran ignored key U.S. demand and military strikes are on the table. Gold also extends gains as safe haven demand and the latest FOMC minutes as investors calibrated expectations for U.S. monetary policy. Google CEO Sundar Pichai meets Prime Minister Narendra Modi, says India is uniquely positioned in the AI race. Google's AI head Demis Hassabis says that India can play a leading role in AI adoption, also warns of potential misuse by bad actors. Tata Group is not pressing the panic button over AI disruption. Chairman N. Chandra says TCS will ride AI wave and IT companies will have greater responsibility in AI era. TCS CEO Kirtivasan says that there is no need to panic. That's an exclusive. Hello, good morning. You're tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. We had an interesting close that came in from the US market, a bit on the positive side, but Asian markets, the ones which are open, whether you look at the Kospi or the Nikkei. So Kospi is doing well. They've jumped up to record high levels today. Most of the markets, though, nonetheless, are shut in the trading session. Whether you look at the Taiwan market, Chinese market, Hong Kong market, all of them are shut. Vietnam market, that is also shut. But yes, we have Kospi that's open and Nikkei that's open. So when you look at the Kospi and Nikkei, we're seeing a bit of a positive gain coming in on that front. Let's look at the Nifty implied open. What's the indication today here? 20-point uptick as of now. So very mild positive start is what we're keeping an eye out on. But yes, that will be interesting to see where whether we pick up momentum like the other Asian markets which are open, or where are we going to be headed. To understand all those cues, let's bring on board a team of research who's joining us to set you up for trade, tell you which are the important stocks to watch out for, cues in the world of F&O as well. First up, we have Ekta who's joining us this morning to tell us the important cues that you should keep an eye out on this morning. Good morning, Ekta.
Morning. Well, yes, the markets did close higher for the third straight session yesterday. The Nifty closed above 25,800. We had the FIIs which put in their weight in yesterday's trading session. So they bought around 1,500 odd crores and the DIIs net bought around 440 odd crores. Like you mentioned, multiple Asian markets are closed, such as the larger markets such as China, Hong Kong. But the ones which have come back from that lunar holiday, for example, the Kospi as well as the Japanese markets at this point in time are trading higher, taking cues from the US markets, which did close higher in yesterday's trading session, led by the tech stocks. We do have Brent crude, which has jumped up as well, so do watch out for that. Overall, in terms of what we could watch out for today would be the US markets, which would possibly rub off positively on the Indian markets along with the tech stocks. So we also have the AI summit, which is taking place. And remember that today there will be big faces such as Prime Minister Modi, Mukesh Ambani, Sam Altman, the French president, just to name a few. We have results coming in from ABB India, and overall the Nifty testing 26,000 would be something that the street would watch out for, along with the tech stock seeing a rebound. Remember that the Nifty IT index has almost lost around 15% on a year-to-date basis. Now, in terms of the US data, just watch out for the US weekly jobless claims data, pending home sales report, as well as the Friday release of the personal consumption expenditure price index in the US, which would be one of the important inflation gauges. So that would be something that the street would be watching for.
Okay, thank you so much for that, Ekta. But now let's go across to Gaurav, who's here to tell us the important stocks that we're keeping an eye out on in today's trading session. Good morning, Gaurav.
Well, good morning. First, let's talk about Pace Digitech, because this company has received an order worth $1.35 million, and this is from the Yakin Chemicals for supply of mobile battery energy storage system. Other than that, NCC. Now, we may see some negative reaction here, and the reason being that company has been debarred from participating in any NHI tenders for the next 2 years. If you look at pharma stock, we have got some news overnight. First, let's talk about Zydus Life because company has received their final approval from US FDA for one of the drugs called Bosentan tablet. Dr. Reddy's, now this company is in an agreement with Mercury Pharma and they are going to acquire trademarks along with some other assets for acquisition value of around $32 million. Alembic Pharma, if you look at this company, US FDA has recently completed its inspection at one of the facilities with 2 observations. Company said that none of these observations were related to data integrity. Now, if you move to HUL, they have actually announced a capex of around 2,000 crores overnight. They said that this capex will be done in the next 2 years and this will expand their manufacturing capacity. So let's watch out on this as well because it could be a positive tone for HUL. And lastly, let's also not forget about Yatra Online because promoter has now sold 1.8% stake on 17th of February. Promoter said that this stake was sold to fund certain legal and compliance expenses and they do not intend to sell any further stake. But let's see if there is any negative sentimental reaction in this stock today.
Okay, thank you so much for that, Gaurav. But in the final update, let's go across to Sudarshan, who is joining us from the FNO desk to give us the FNO update. Good morning, Sudarshan. Today, what are the important levels, cues that we're keeping an eye out on?
Good morning, Vinny. So it's a sensex expiry day, and if you talk about yesterday, it was another day of good trade, and especially till half day of the trade, it looked like that we might have a flat close, but at the end, it was a good recovery that we have seen in IT stocks, and also positive move continued in the banking names, and Nifty Bank is now hovering around record high level of around 61,700. Now, for Nifty, the important part was Nifty has hold on to levels above 50 DMA of 25,750. Put call ratio, it has increased further to 1.21 versus 1.13. That indicates you that put writing has continued for another day. Now coming to the 5 flows, we have seen buying both in the index futures and in the stock futures. In the index futures, they have bought more than 1,200 crore. In the stock futures, buying figure was more than 300 crore rupees. Also, they have added long positions, and that's the reason long exposure now increased to 23%, while they have reduced short positions, and now short exposure has reduced to 77% from the level of 79% that we had yesterday. Now in the options data, 25,700 and 25,800 put options were active, where we have seen maximum put writing. On the call side, 25,800 and 26,000 were the most active call options. So support for Nifty, first support would be around 25,700. That's your 100-day moving average. Resistance, first resistance would be around 25,950. That's your recent closing high. 2 stocks remain in the band. Those are SAIL and Samant Capital. Some of the stock that I'll keep an eye on the fresh long side, I'll keep an eye on CG Power, and on the fresh short side, I'll keep an eye on Vari Energies and Aurobindo Pharma.
Okay, thank you so much for that, Sudarshan. But let's move on. And Google CEO Sundar Pichai has said that India is uniquely positioned in the AI race. He visited the capital to attend the India AI Impact Summit. And speaking at the Bharat Mandapam, Pichai said that India was on an extraordinary trajectory in AI as the language ecosystem and digital infrastructure makes a powerful foundation for innovation. Listen in.
Today we are announcing a new $30 million Google.org AI for Science Impact Challenge to support researchers globally using AI to drive the next generation of scientific breakthroughs. We are excited to announce a partnership between Google DeepMind and the Indian government as part of the Global National Partnerships Program. This will broaden access to frontier AI capabilities for national priorities. Also partnering with Atal Tinkering Labs to bring Gen AI assistance to over 10,000 Indian schools and 11 million students with a focus on robotics and coding in the classroom.
Okay, interesting commentary coming in there, but Tata Group is not pressing the panic button over AI disruption. That's the word from Chairman N. Chandra. Says that TCS will ride the AI wave and IT companies will have a greater responsibility in the AI era. Listen in.
Way to look at it is, it will create enormous opportunities. AI is a very, very important multi-decadal change. Every company has to figure out, has to ask fundamental questions. What is my moat?
If I could rephrase what you said, it's not going to be so easy to throw out Indian IT services companies in the mix as is being made out to be. Essentially, that's the point that you're making.
Point. The second point, actually, the more important point I'm making is IT services companies, rather system integrators, will have a greater job, greater responsibility. One other point, but the companies have, IT companies have to do a lot of work.
Yeah, they do.
like every other time, they've got to equip themselves with all the skills that are required. They've got to go through that.
Execution. The execution risk, absolutely. The execution risk is going to be the key one.
Okay, interesting comments coming in from the India AI Impact Summit in New Delhi. But on that note, we're going to slip into a very short break. We'll get you cues from Wall Street as well as more updates on the other side. Welcome back to Power Breakfast in CNBC TV 18. Now getting you the updates on what happened on Wall Street. Because Wall Street ended higher, tech stocks led the gains, and this came in after back-to-back week sessions. Let's go across to CNBC's Steve Kovac, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Wednesday's trading as the tech trade rebounded and the Federal Reserve showed how it's thinking about future interest rate cuts. The Dow added 129 points, the S&P 500 was up 38 points, and the Nasdaq gained 175 points. Minutes released Wednesday from last month's Fed meeting showed a divided central bank with little appetite for rate cuts, but an openness to cut later this year if inflation drops. While members were largely in agreement to keep rates steady at the January meeting, there was a divide between whether the Fed should focus more on fighting inflation or supporting the labor market. And pharmaceutical giant Moderna said on Wednesday that the Food and Drug Administration has reversed course, now agreeing to review its experimental flu vaccine about a week after initially rejecting the application. The shot utilizes the same mRNA technology used in the company's COVID-19 vaccine. Moderna says it hopes to make it available to seniors later this year. The FDA's decision is expected by August 5th, and the stock soared 6% on the news. That's what's happening here in the U.S. Back to you, Mumbai.
Thank you so much for that. And as Steve mentioned, Fed Minute shows officials split on the interest rates. Let's go across to CNBC's Steve Leisman, who's here for more details on there for MC Minutes.
Very interesting set of minutes from a meeting where the Fed paused rates, really showing a pretty sharp divergence in the policy outlook among different members of the Fed. I'll go through, but it looks like there's three camps. See if you can figure that out. Supporters of the decision to pause saw policy in the range of neutral estimates. Dissenters and those otherwise opposed to pausing saw the policy rate as, quote, still meaningfully restrictive, and they were more concerned about downside risks to the job market. Now, several said the statement should mention the possibility, get this, of rate hikes. They disagreed with what the statement said. They said the statement should have been two-sided, possibility of cuts, but also possibility of rate hikes if inflation did not decline in line with expectations. Some said it was appropriate to hold policy steady for some time, as well as a number saying further cuts were not appropriate until, quote, disinflation was firmly back on track. Several were concerned that further cuts should show a lack of commitment by the Fed to the 2% target. So rather than coming together, it looks to me like both different sides in this debate over the outlook for policy are kind of hardening their positions here. On the dovish side, they saw tariff inflation was expected to ease this year. Housing inflation expected to put downward pressure on inflation. We saw that in the last CPI report. Several saw higher productivity growth, along with some of the deregulatory aspects of technological change, also putting downward pressure on inflation. But some wanted to wait to see whether or not that happened. The risk of inflation above 2%, according to some on the committee, was meaningful. Most saw the job market stabilizing in this low-hire environment that we've been talking a lot about. Economic activity seen expanding at a solid pace. Pretty good agreement on that. The consumer appearing to be resilient and growth expected to remain solid in 2026. As for risks, they discussed risks around AI investment. They discussed risks around private credit and hedge funds and their growing footprint in the equity market as well as in the treasury market. So I'll leave it there, guys, but I don't see this committee coming closer together on this issue. Remember, we had 2 dissenters in the last one, and I think if everybody had the vote, there might have been a few other dissenters in there. But those who think the Fed ought to pause, well, now there seems to be a contingent who thinks the Fed ought to talk about two-sided risk if inflation does not begin to behave the way they hope.
Okay, thank you so much for that. But now let's move on and get you the latest on Trump-related developments. And starting with the comments on UK, Donald Trump in a post on Truth Social urged UK Prime Minister not to enter a 100-year lease with Diego Garcia, calling it a big mistake that would weaken British control of the strategic Indian Ocean island. Now, Trump questioned the legitimacy of those claiming rights to the territory and warned that losing control could harm UK security. He said that the US also may need access to Diego Garcia and the airfield at Fairford if the tensions with Iran start escalating. While he also affirmed that US and UK still have strong ties, Trump argued Britain must remain firm and avoid what he called maybe could turn out to be a weak deal if this is something that goes through for a 100-year lease. But in another post on Truth Social, what President Trump also said that the country's trade deficit had contracted sharply due to his tariffs and that the US was set for a trade surplus in 2026, and that would be the first in decades. Now, he said that the deficit had reduced by 78% due to the tariffs that he has imposed on other countries. Moving on to other updates, the US president has signed an order aimed at protecting domestic supplies of elemental phosphorus used by US military as well as glyphosate-based herbicides common in US agriculture production, and this is according to White House officials that we picked up from Bloomberg. The executive order invokes a Defense Production Act to protect domestic supply chains for both these materials. And in the last update that we have, President will deliver remarks on the economy in Rome, Georgia, according to his official schedule released by White House, as well as President Trump will also be participating in the Gaza Board of Peace event as well later today. So clear big updates that we're keeping an eye out on even for tomorrow's trading session. But on that note, we're going to step into a very short break. We'll come back with cues in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on and talk about the recent updates. India's Russian crude imports recorded a 12% reduction in January, and this is despite a 4% rise in total imports. India compensated the drop in Russian volumes with imports from Iraq, which saw a 14% month-on-month rise. And this is according to the data published by the Center for Research on Energy and Clean Air. Meanwhile, Senator Brad Sherman, who has been a vocal critic of President Donald Trump's tariff policies, has said that India is being singled out for buying Russian oil, as countries like Hungary import 90% of its crude from Russia with no tariffs. And China, which is Russia's biggest oil buyer, hasn't been hit with sanctions tied to purchasing Russian oil. So that's the latest update coming in here. But let's talk about more in terms of commodities. Manisha Gupta is joining us to give us that what should we keep an eye out on this morning in terms of commodities. Good morning, Manisha.
Morning, and thank you for that. Well, I'll start with the crude oil prices itself, and what a strong move in the overnight markets, where we have seen 4% of gains come in for the crude oil prices, and now Brent is trading above $70 a barrel. The U.S. heating oil prices also gained up by 5%. Well, the U.S. and Iran are yet to reach a potential nuclear deal, is what J.D. Vance has said. There are fears of military intervention by U.S. and Iran. Also, the Ukraine and Russia talks in Geneva have ended without any breakthrough, and that geopolitical premium seems to be coming back in case of prices. There is a report from Eurasia Group which says that there is 65% probability of a U.S. military strike on Iran by April end, and that's what the markets seem to be working with right now. All this has led to gains come back in case of precious metal prices, where gold gained 2% overnight, silver is up 5% in the overnight markets, platinum as well gained 3.5%. The markets also seem to be reacting to the FOMC meeting minutes that came in overnight. They show that the Fed is split on path of rate cuts. But the data from US has been quite positive. So industrial production numbers came in best in 1 year. Housing starts at a 5-month highs as well. So the markets seem to be moving towards that interest rate cut. But at this point in time, the safe havens seem to be doing well, while we are looking at base metal prices seeing a bit of a decline.
Okay, thank you so much for that, Manisha. Important to keep an eye out on the metals as well as crude side for today's trading session. But with that, we are absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next to Bazaar Morning Call.